Hello everyone, it's Rick here with GoodIncomeStreams.com and the author of Invest Like the Rich. And on this video, we will be talking about the 5 different ways on how to purchase tax liens. Now we must understand that in each state of here in the United States and each county of those states does things a little bit differently. Now some states are tax lien states and some states are tax deed. As a matter of fact, it's approximately half are tax liens and half are tax deeds. However, some people might argue that some of these states are dual, that they do both tax liens and tax deeds, which is true. And some of them are tax deed states that act almost like tax liens. But for the most part, you're looking at about approximately half of the United States is tax liens. Now, if you enjoy videos like this, please hit that thumbs up button. Also, don't forget to subscribe and let me know in the comments below if you have any questions. Now, getting back on how to purchase tax liens, the first one is bid down the interest rate. Like it says on the title, the person that is willing to take the lowest interest rate will be the one that will win that lien or tax lien certificate. So if you are the person that's bidding on this tax lien, it depends on what your expectation or what your ROI is. You could be bidding down as low as 10, 9, 8, 0% like some people do. And yes, it sounds weird, zero. There's no return on that, but that's because these professional investors have a plan or they know what they are doing. So kudos to them, right? But for me, as I've mentioned in my previous videos, I will not go anything below 12%. That's because if I bid on anything less than 12%, that just means that I'm just wasting my time. And I prefer to make more than 12% because I can invest my money in other places in that case. Now, the second way you can purchase a tax lien is bid up the premium. Now with this one, it usually means that the person that is willing to pay the most over the tax lien certificate amount. So say for example, the tax lien certificate is $1,000 and you are willing to pay $1,100, meaning $100 over the tax lien certificate, and nobody bids above you, then you become the winner. So usually this means that whoever is willing to pay the most for that tax lien certificate wins that tax lien. In some states, you will earn a return on your tax lien certificate and the premium. So say for example, that $1,000 example that we had, and you paid $1,100, you will earn a return on that $1,000 and a return on that $100. But that's only in some states. Now in other states, you will earn a return only on the tax lien certificate, only the original tax lien certificate. Only on the tax lien certificate, only the original tax lien certificate. So say for example, that $1,000 that we were talking about, you will earn a return on that $1,000. However, the premium side will just get returned to you. So you will get back your $100. You will not get a return on that. Now in other states, you will not get your premium at all. So say for example, that person redeems that property or that tax lien, you will get your $1,000 back plus the interest on that $1,000. However, you do not get your $100. So you lose out. So you have to be sure that you know what you are doing. Just because you want to bid on a tax lien doesn't mean that you're always going to make money. So always do your research, right? Now the third way you can purchase a tax lien is a combination of the first two, meaning bid down the interest rate and bid up the premium. So it usually goes something like this. You first bid down the interest rate all the way down to 0. And let's just say everybody still wants to bid on that property or that tax lien certificate on that property. Now the county will switch from bid down the interest rate to bid up the premium. So on top of you not earning an interest rate on your tax lien, you are also giving away premium, meaning you are paying for that so that you can get that tax lien without earning any money. So if the homeowner decides to redeem that lien, they will be getting only that $1,000 because they don't have any interest rate. It was zero. Plus, they gave that $100 away just so that they can be the tax lien certificate winner. Now, it sounds weird, I know, but there's a strategy behind it, and there's a lot of professional investors that still do this because they can still make a lot of money. Now, you must be wondering, why on earth would you do something like this? You're in the business to try and make money. Well, the short answer is these professional investors have deep pockets and they are banking on other things, like first rights to the subsequent tax lien certificates. So after that first tax lien, they have the right to purchase the subsequent tax liens. They don't have to put it up for auction. Also, these professional investors are banking on if these property owners do not pay or do not redeem that tax lien certificate, they will get a bigger return on their money because they can foreclose on that property, which makes a great return for these professional investors. Now, personally, I do not go into this because it's a little complicated and I don't like taking chances. I like guarantees, but that's the third way you can actually purchase a tax lien. Now, as far as I know, the only state that does this is New Jersey. However, I could be mistaken because I have not invested in all 50 states. Now, if you are enjoying this video, please hit that like button. Also, don't forget to subscribe and smash that notification bell so that YouTube will notify you the next time I post another video. Also, if you are getting confused or if you have any other questions, please don't forget to comment below and I will be more than happy to answer any questions. Now, the fourth way is rotational bidding. Now, with this one, it's not an actual bidding process. Instead, they just go down the room and try to find who is willing to purchase that tax lien. So there are two ways that I know that it's done. The first way is the very long, arduous way, and that is each bidder is assigned a number, and when they have the tax lien certificate, they just go down the row, going to the first person, then offering it to the second person, then to the third person until someone takes that tax lien certificate. Now, there are times that nobody wants that tax lien certificate and they have to go through every single person before they will move on to the next tax lien certificate. Like I said, very long process. This one is usually done in like smaller counties with less people and all that. Now, the second way I've seen the rotational bidding done is by raffle or just going down their list. So if you're the first one that came in, you get to be the first one to pick the tax lien certificate you want. However, you get to only pick one. Until everybody gets to pick one, then they will come back to you. So same thing with the raffle, whoever gets picked first, they get to pick whichever tax lien they want. No competition, which is awesome. However, the chances of you taking home more than one tax lien certificate is highly unlikely. And also, if there are a lot more people than tax lien certificates, then there's a high chance that you will not get anything at all. Also, this can be very beneficial if you are the first one picked. However, if you are the last one picked, guess what? You get the leftovers, or you get the ones that nobody wanted. Now, unless one of those is in your list, it usually sucks and you end up going home with nothing, or you get to go home with something that you didn't really want, which I do not recommend. Because unless you did proper research on that property and you know for a fact that you want to purchase that tax lien certificate, and you know for a fact that you are willing to take that property if that property owner doesn't redeem, then I do not recommend you getting that tax lien certificate just to have one. Now, the fifth one, which is my favorite, is the leftovers, or we call it over the counter. Now, I know what you might be thinking. Leftovers? Why would you want that? That's the ones that nobody wants. That's the ones that's picked over. Those are the junky properties. Those are the ones that nobody wants. And you know what? I hate to say this to you, but yes, nobody really wants those. So I don't want you to be picking through the junky properties. Just leave that to me. I only want you to have the cream of the crop. Nah, I'm just joking. Nah, actually, these are the properties that I invest in all the time. Now, granted that some of these properties are not the best. However, there are still a few there that are great. And guess what? I get to keep the entire interest rate. So say, for example, when I invest in Florida, I always use the over-the-counter list. And with that, I get the full 18% interest rate on all properties that I invest in, or on all the tax lien certificates that I invest in. Nowadays, I hardly ever attend auctions unless I want to acquire a tax deed. As far as tax liens, I just do the over-the-counter. One, I don't have competition. And two is I get to keep the entire interest rate. So something to remember. Also, with over-the-counter, a lot of them are online and you don't even have to leave your home. You can just type it in and you can pick whichever one you want, which is a win-win. Now that we have established the different ways on how to purchase a tax lien, which one are you going to choose? Let me know in the comments below. Also, if you have any other questions or if you're confused, let me know as well in the comments below and I'll be more than happy to answer those questions for you. Now don't forget to hit that like button and subscribe as well. And don't forget the notification bell so that YouTube will notify you the next time I post another video. Now I'd like to say mahalo for watching this video and remember to always strive for financial independence. And until next time, aloha!